What is your read on what is happening in China at the moment? Because quite clearly the market is taking a view, taking a position, a very pessimistic view of what's happening. What's your read?
Well, first of all, if you look at the overall economy, it's over $10 trillion GDP, and the growth is 6.9%, which is not bad at all for such an economy. And obviously, it has slowed down a little bit. But if you look at the service sector, the consumption sector, and also the sector has to do with the technology, they're actually doing pretty well. Right now, China is in a transition, right, to move into a new model. So it does take a little bit of time.
From manufacturing to services, the problem at the moment for your stock, listed on the Nasdaq, still being used as a proxy for a slowdown, whether it's in manufacturing or not. Is that a reflection of anything that's happening with your company, or is it just what is happening more broadly with the data in China?
Right. Well, I can't comment on the stock itself, but overall, there are really two factors to really look at how we move forward. First is the macroeconomics, the service, and the overall economy. And the second thing is really the how fast people move online. If you look at the online-offline connectivity, less than 1% of the business right now is done offline. So there's a huge potential to move all these activities to online. In fact, that's also the most exciting part of China's business. In China, we call it Internet Plus, is to apply internet technologies and business model to all the traditional industries. And that's going to take off in a profound way.
The founding sort of ethos of your company was the search engine side of the business. Now we're pushing more into fintech, into financial services. Right. What is the reason behind that, Ya-Qin?
Right. Well, the search continued to be critical for us, whether it's for PC or for mobile. But if you look at in the mobile internet, search has taken a different means. It's not only to look for information, but also connect people to real services. So we look at online, offline connectivity. And people actually use cell phones to book tickets, to book movies, to actually call taxis or making doctor appointments. That's super exciting for us. And also we look at technologies going to change the industries like finance, education, healthcare, and also look at new things like autonomous driving, because that's what is right ahead. Yeah.
It all sounds very super exciting. I think there's sort of echoes with what Google is doing as well on that side of things. But all these new super exciting things that you talk about, they're not exactly helping the bottom line right now, and you wonder when that starts to deliver something towards investors. What kind of time horizon do you have where actually that does contribute significantly to the bottom line?
Right. Well, we are in this for the long term, right? We are a technology company. We invest things like artificial intelligence. It has a short-term impact. So right now, it obviously make our search engine more efficient, more accurate. It make our voice recognition, picture recognition, machine translation technology a lot more accurate. And that has been already used. But in the long run, it will change our business in a very fundamental way. And that's what we're looking for. Even in the online to offline, called O2O business. Yeah. In the short term, that's a lot of investment, a lot of cash to be injected. But when this stage is over, right, we actually we're able to make it very efficient using our technology. Online, offline is not only about the subsidy. There will be subsidy, but it is technology, algorithm actually make it efficient, make us more competitive.
Those investments you make, is it easier to do it via M&A? Instead of doing it yourself? Is that something you expect to do even more in 2016?
Yeah. Well, we really look at our product service to be the core strategy. M&A and the partnership will be part of that strategy, and we will continue to look at that. And if you look at JVs, investment, and all those things are part of our business strategy.
It's a competitive business. Just very quickly, what is the edge of Baidu? What is your edge over other Chinese companies doing almost exactly the same thing?
Right. Well, it is technology. Right. It is. We invest 15% of our revenue into R&D. So all the stuff I just talked about, voice recognition, picture recognition, machine translation, deep learning, and the neural networks, and all those things will make us competitive in the long term and short term too.
Ya-Qin, just to go full circle and very, very quickly, you turn up at the World Economic Forum, you're going to get question after question about China. Very simply, a buy or a sell at this point as far as you're concerned, just looking at the Chinese economy?
Yeah, I don't make a speculation. In the short term, there is a pressure. We have to face it, and it takes time to make that transition from manufacturing to service, and from labor-intensive to innovation-driven. But it's happening. I'm bullish in the long term in China, and we bet in China.
Baidu President Ya-Qin Zhang, thank you very much for joining us.